I want to take a look at a trade that we looked at last week in some detail, and that was the trade of gold, which at that point was at a very critical juncture, 76.4 on the Fibonacci. You can see here behind me the sentiment wheel showing that 69% of IG clients are currently long gold, and having gone past that 76.4, the long gold trade looks like it's got a bit more legs. Let's take a look at the chart of gold at the moment. The bottom three lines here are all showing the direction of upward momentum, which is where we're going at the moment. The relative strength index here, not quite overbought, but that itself wouldn't matter because the direction of gold has been fairly strong. Stochastics also showing an uptick, and the MACD as well, all moving in the right direction. But let's take a look in some more detail about this chart up here. This is the daily candles for spot gold. This has got the Bollinger Band overlaid on it, and this rally that we've had, which has gone all the way from 1,195 dollars the ounce all the way to where we are at the moment, from the bottom to the top of the Bollinger Bands. There's a little bit more room as well at the top there to go on the upside. And let's take the Bollinger off so we can get a bit more idea about precisely where we are in terms of the move that we've got, because I think it's important to look, if we can, at the intricate details of the daily candle moves. This big rise we got today on this Monday as a result of the losses that we've got in the equity markets. You can see at the back end of last week we went through this 76.4%. Yesterday's trade lifting us up first of all, and then here we are on the Monday. Now, can we get up to the 1,264? I think we possibly can. If you're going long at the moment, this trade may have just a little bit more to go, but if you're going long at these sort of levels, you really want to be putting on a stop loss at about the 76.4% or 1,247, which coincides with around about the 200-day moving average. So that would be your stop if you're going long this. And your price target would be this 100% retracement from the start of the swing point on Monday the 27th of February. So that would be a complete correction on this. Do we go higher than that? Well, there's a potential of going higher than that. I would certainly look to close out the trade at that point and take profits, and then look as to where gold will go. Because if it does go up to this and then we see a reversal candle, we could well end up wanting to go short on gold at that level. But I certainly think the way it's going at the moment, the next stop off point potentially is this 1,264. Where does it go after that? Well, if you take this back, you can then see that we've got pretty much blue sky right the way up until 1,290 first stop, and then there will be this swing high here going all the way back to the 4th of November, which should be over the 1,300 level, which is a significant big number there for the price of gold. If we get a retracement and we do start to pull back on from this 100% Fibonacci retracement, you can then look to take this short down back again to this 76.4% retracement from the swing low on this move that we've got here, and that would coincide again with that 200-day moving average. So at the moment, at least, long gold play looking as though it's still in place, but do watch that 1,264 level. There could be a point at which it either goes past it and continues on the rise, or it could be another reversal for gold. Watch out. Okay? Yep, that's fine.